I'm Charlotte McLeod with investingnews.com, and here today with me is Edward Sterck, Director of Research at the World Platinum Investment Council. Thank you so much for being here. Great to have you as always.
Well, thanks for inviting me on again. It's good to catch up and to talk all things platinum.
Of course, and as usual, we're going to be going through the World Platinum Investment Council's latest quarterly report. And it's an exciting one because we get to look back at 2025 as well as forward into 2026. So definitely we want to get over to the 2026 outlook. But before we do that, I was hoping we could take a look back at the year that we've had so far and just get your overall thoughts, how you would sum up 2025 for Platinum, because it's been quite an interesting year.
It certainly has been. So from a supply-demand perspective, I think it would be fair to say that it's the third consecutive year of a pretty deep and substantial deficit. 692,000 ounces is our forecast for the deficit for the full year. As a reminder, the total size of annual demand is just shy of 8 million ounces. So, fairly meaningful shortfall. It's really been a year that's been characterized by a lack of supply more than by demand growth, though. So, in fact, if you look at demand, total demand was actually down a fair bit year on year, or was expected to be. But it's really just that supply is by far and away falling short of annual demand requirements, and so hence we have the deficit. I think obviously from a look back perspective, what's been pretty hard to avoid this year has been the price action. So really coming into May, London Platinum Week, that was really the beginning of the price rally. And at one point we were up 88% year to date. It was the strongest performing commodity across the spectrum for a while. I think silver's eclipsed it recently. Obviously, quite a lot of news going on there. But overall, we've had a period of price consolidation and prices remained extremely robust. What are the factors that are driving that? Well, I think, firstly, third year of big deficits, depletion of above ground stocks. I suppose that they must have fallen to levels that would be considered unsustainably low. And so, the availability of metal in the spot market has just not been as liquid as it would have been in the past. And so that creates this market tension. And one of the other things that is notable about that is that market tension, it can be seen in things like lease rates. So that's the cost of borrowing metal. They're at historically elevated levels, which again is an indication that there's a shortage of metal in the prompt market. But a second order impact of that is that the leasing market is actually really quite significant. If you look at it in terms of annual volumes, and remember this is including turnover, so it's not an ounce per year, but the leasing market peaked at about 60 million ounces back in a few years ago. It's eased a little bit, but on average it's been about 30 million ounces a year for the last 5 years or thereabouts. But of course, with these extremely elevated lease rates, we're seeing, we think that we're seeing people change how they own platinum. So rather than leasing it, they're switching towards outright purchases. And the timing for that looks like it also coincided with kind of around the sort of May, June time, which is when we began to see this, this strong price action come through. So a lot of interesting things. I think we still see that market tension in the market. So still got elevated lease rates. You've still got strong backwardation in the London OTC market. And so it just looks like these tight market conditions are set to persist.
Well, I think that's a great review of 2025, and we can now start to take a look forward at the next year. And one thing that really stood out to me when looking at the report from the World Platinum Investment Council is that next year, the market actually, after these 3 years of deficit, starts to come into balance. But it sounds like from what you've been saying, what's in the report, there's a little bit of nuance to that because people might look at that and think that means lower prices, etc. So how would you characterize the market in 2026, keeping in mind that it comes into balance?
So we've got a tiny surplus for next year in our numbers. So 20,000 ounces. As you said, that's effectively a market imbalance. I think it's probably worth bearing in mind a few things. So firstly, it is contingent upon some profit taking from ETFs. So if you look at our numbers, we're expecting 170,000 ounces of profit taking from ETFs in 2026, which is obviously going to be contingent in itself on a high platinum price. I would say that there is probably a bit of a risk associated with that outlook. So, this year, for example, ETF holdings have been broadly unchanged, and that's despite the fact we've had this tremendous price rally. So, it certainly feels as though The motivation for the holders of those ETFs is perhaps pivotal on expecting even higher platinum prices than we've seen so far this year. The second area where the deficit or the surplus of 20,000 ounces is contingent on is on 150,000 ounces flowing out of CME exchange stock inventories and being made available to the market. Now, if we don't have that ETF profit taking and we don't have the CME inventory unwind, then we remain in a deficit, a quite substantial deficit of approaching 400,000 ounces for 2026. So there are some nuances to this. The other thing to bear in mind in terms of a balanced market is actually a balanced market doesn't solve for the fact we've had 3 years of deficits. It doesn't in any way, I suppose, rebuild above ground stocks. And it's the shortage of above ground stocks that seems to be one of the major catalysts behind this price action and behind the market tightness. So I think a balanced market is one where, clearly it's not in as deep a deficit as we forecast for this year. But certainly it doesn't mean that the market tightness, the shortage of metal in the market is going to be solved.
So definitely it sounds like there is some nuance there and factors to watch next year. The other thing I was getting from the report is that the market outlook is contingent on what we see happening with trade tensions. So I think we've talked a lot over the course of this past year about tariffs and everything going on there. So what are you going to be keeping an eye on this coming year in that regard?
Well, it is a really interesting area. So you've got broadly speaking, two different aspects to the trade tensions that are mainly being driven by the US, of course. And it's worth noting that, when I mentioned that our forecast in terms of a balanced market for next year is contingent upon exchange stock outflows, making that metal available is of itself likely to be a function of an easing of tariff fears in the US. So effectively, if we look at the US landscape, and you've got two investigations that are ongoing at the moment. You've got the Section 232 investigation into critical minerals, which includes the PGMs. That was started by the Trump administration back in, I think it was early July. And then you've got a totally separate and unrelated investigation into alleged dumping of Russian origin palladium into the US market. And as a result of the fact that these are two separate investigations, we kind of need to look at them separately, really. So starting with the Section 232 investigation, in effect, this is looking at the supply of critical minerals from outside of the US and whether that supply presents a threat to national security. Now, there's a number of different sort of ways of testing that, but the threshold for concluding or affirming that it is a threat to national security can be pretty low. So, for example, it can be as little as, are these foreign imports damaging the US domestic industry to the point where the domestic supply of these materials would not be available during a period of an emergency when the US might lose access to international markets. So that's a pretty low bar to set. The other thing to bear in mind is that this investigation is probably being conducted by sort of fairly mid-level bureaucrats. And given you've got a relatively sort of hostile environment in the US between the White House and various parts of the federal government, it's quite possible that actually the simple solution for the person running these investigations is to go, I'll just conclude that it is a threat to national security, because ultimately, once that happens, the report is sent to the president, and it's at his sole discretion as to whether he takes on board the recommendations in the report or whether he chooses to ignore them. And to give you an example of this, back in 2019, during Trump's first presidency, there was a Section 232 investigation into uranium supply for the civilian nuclear industry that concluded that foreign imports were a threat to national security, but Trump chose to ignore it. I would note, though, that back then, roughly 40% of US uranium imports came via Russia, and the relationship between the Trump administration and Russia was probably a bit different back then to that which it is today. So in terms of the outcomes from the Section 232, if you look again at that uranium one, they recommended a combination of import surcharges and scaling import quotas over time in order to try and make the US domestic industry more robust and better able to supply its own needs. So that's possibly one of the outcomes that we might expect to see when this investigation becomes public. Obviously, whether Trump chooses to accept the recommendations or if he chooses to ignore it, that I think is probably harder to judge. Then if you turn to the palladium anti-dumping investigation, the US ITC has already determined that Russia has been dumping palladium into the market at uncompetitive rates, and that's been helped by some form of state subsidies. Now, I'm not sure I totally agree with all those findings, but that doesn't really matter because they've made a judgment that there is uncompetitive practice. The next step of the process is to determine what action to take. And again, that could be some kind of import duty or surcharge on Russian origin palladium, or it could be some form of quota. Now, obviously for platinum, there is a feed-through impact here because there is an element of substitution that can occur between platinum and palladium in catalytic converters. So, it is something to watch. The dates for the initial decisions, I think, are the 29th of December and the 6th of January on this. But it's possible those dates may be pushed back due to the government shutdown that has obviously now ended, but has probably caused some delays. So I think, going into next year, we should get greater clarity on both of these investigations. And it's certainly something that we'll be watching in terms of trying to inform our estimates for 2026 as a whole.
Those will be great points to follow up on next year, and really good to go into the comparison to the uranium-232 investigation. I know our audience is very familiar with uranium, so some of that will probably be carrying over there. I also wanted to ask you if you could break down what we see happening in platinum investment demand. It looks like it is going to come in at a 5-year high for 2025, but there's multiple different components there. I know you've talked a little bit about some of them already, but the situation seems to then change in 2026. So that's a little bit different too. What would you pull out there for investors to be aware of?
Well, in terms of physical bar and coin demand, this year has been very much characterized by significant strength in demand out of China. So the Chinese market has just been growing, basically from more or less zero back in 2019 to becoming the biggest market in the world for platinum investments products. And I think that momentum is likely to continue, but maybe not at quite the same sort of pace going into 2026. In contrast to that, one of the challenges in other markets, and the US would be one to focus on here probably, is that the high lease rates have meant that manufacturing platinum investment products has just simply become too expensive. You'd have to charge too big a premium to the buyer to be able to compensate for the high lease rates, because the bar fabricators, the coin fabricators, often don't own the metal. They just lease it and then they close that lease out when they sell the investment product. And that now is just, like I said, it's just become too expensive. So there's a shortage of product in the US. And although the demand is very strong, people just can't find enough bars and coins. So that's holding back investment flows there. If you look at the ETFs, as I said, they're broadly unchanged for this year. But in terms of the step down in total investment demand for next year, it's not really on the physical side. In fact, we've got continued demand strength there. It's really in those ETF profit taking and the exchange stock outflows that I highlighted earlier.
Okay, I think that makes a lot of sense. And I'm glad you brought up China, because I wanted to ask you about that as well in relation to platinum jewelry. So we've seen this big increase in platinum from China. Can you go over what that might be related to? Is this because of high gold price? Is there something else that's going on there? What are you seeing driving that interest in China right now?
Look, it's very much linked to a combination of high gold prices, and I think just a flight to hard assets, basically. So in terms of investment demand, that's been a big motivation. In terms of jewelry, it's a little bit more nuanced. So gold jewelry sales have fallen quite significantly because of the high gold price. And so the wholesalers have been looking to compensate for that by offering alternative and lower cost products to their customer base. And platinum has been a big part of that. I would say that the market probably got a little bit overexcited about the potential for this in the second quarter. You could see there was a significant increase in the number of wholesalers offering platinum jewelry, lots and lots of restocking. So the Q2 numbers for China jewelry demand are really quite significant. But we've seen a bit of a reset since then. For this year as a whole for China, we're still expecting, good double-digit growth in jewelry demand, but probably not at the pace that people were getting enthusiastic about earlier in the year. And I think that'll broadly look to continue into 2026. A key thing for the platinum jewelry market in China, though, is that it's very much a yellow gold, yellow metal type market. And so a certain amount of effort needs to be put into educating consumers, advertising and so on, in order to, to really capitalize on this opportunity and to maximize the potential for platinum jewelry demand there. And that just takes time. It'll come in due course, but expecting a market to transform overnight is probably overly optimistic.
Yeah, absolutely. I think these things take time, and I often am honing in on the investment and jewelry side. But anything you would add on auto and industrial demand, either in 2025 or factors you would pull out to watch in 2026 for platinum?
I think just high level. I mean, automotive demand is actually just continuing to be higher for longer. Really, we've obviously got the drivetrain transition towards electrification. That's going to continue. We think it's going to be at a fairly slow pace. But if you look at, for example, automotive demand for platinum plus palladium and projected out over a longer time period, we've only got about a negative 1.7% CAGR over the next 5 years. So pretty modest pace of decline. In terms of industrial demand, this year was actually a bit of a low year for industrial demand or was expected to be from a cyclical perspective. We've just, over the last 4 or 5 years, we've had significant capacity additions in the glass industry that have been a big draw for platinum demand there. And this year, we're just seeing fewer new facilities being constructed. We are expecting that to begin to return towards growth from next year. So we do see a step up in industrial demand next year, but it is very much dependent upon the timing of new facilities opening, be that glass, chemicals, petroleum refining, and so on. But look, I think, slow and steady growth. If you look at industrial demand going back to 2013, I mean, it's averaged about a 3% CAGR over the time period from then. But you do get quite a lot of volatility on a year-to-year basis.
Thank you for going over that as well. And I want to make sure we touch on supply as well. So mine supply looks like it's going to be down 5% in 2025. And I feel like every time we talk, we speak about the challenges that the miners are facing when it comes to platinum. So I'm wondering if you can talk about the challenges they might have faced this past year and whether you see those persisting into next year as well.
Well, I think a lot of the challenges for the existing production, probably are being solved to a degree by price. We've seen prices increase for all of the PGMs, and certainly that just puts the miners in a more robust position. The story over the last few years has been basically restructuring production to accommodate for lower prices. That environment has changed. But I wouldn't expect any growth. And the main thing we're dealing with here is that these are deep level underground mines for the most part, and they're not mines that you can flex output from rapidly. So you'd need to see sustained strength in prices across the PGM landscape, not just for platinum, for probably for a few years before you began to see meaningful investment decisions in terms of increasing output. And I think that then delivering on that investment will take a few years more as well. So, realistically, mine supply is likely to be at or around current levels for the foreseeable future from an investment timeframe perspective in terms of capital markets. It's probably worth touching on recycling supply though. So recycling supply is more price elastic than mine supply. So we are expecting a reasonable increase in recycling supply volumes coming through into next year. That's really driven by automotive and a little bit by jewelry recycling as well. But fundamentally, there's still some constraints on the level at which recycling supply can increase. So there's still a bit of a shortage of end-of-life vehicles. You've got some financial considerations in terms of credit lines in certain geographies like the US that need to be solved before we see a significant increase. But I think recycling supply, we can probably expect a reasonable sort of healthy growth over the next few years. And that's baked into our base case forecasts, I should say, and has been for a while.
Yeah, I think I remember you told us previously, even though prices go up, there's only a certain degree to which the recycling can respond. So good to go over both of those aspects of supply. And I'm wondering if we put all of this together, the demand and the supply side, I know you aren't a price predicting firm, but I'm wondering what you can say about price looking forward into 2026. It's been an exciting year. I think people are hoping it will continue. Anything that you could say? Well,
I think there's probably a couple of things. Now, as you mentioned, we because of the type of organization we are, we can't forecast prices. But what I would say is that, the price rally we've seen this year has not solved the deficit. Normally in a deficit market, you'd expect the price to increase until you either incentivize more supply into the market or you disincentivize demand. And that just simply hasn't happened despite the big price increase. So clearly the kind of elevated prices that we've reached are still insufficient to attract more supply into the market or drag more metal out of above ground stocks. And so that's probably something just to kind of think about when looking ahead to 2026. The other thing on price I should probably highlight is that the new futures exchange, the Guangzhou Futures Exchange, has launched in China, started trading last Wednesday, and we're seeing some pretty significant volumes transact on that, even though it's only just opened. And that's open to investors in China to access through brokers. So just thinking about the kind of China being the biggest market for PGMs globally, but has very much been sort of more of a price taker than a price setter. Clearly with the futures market opening up there, the future outlook for Chinese platinum demand and palladium demand, can begin to be factored into international price discovery, which may be something to keep an eye on going into 2026.
Well, and I think that blends into a question I wanted to ask before I let you go, which is, how is the investment case for platinum looking to you? And I think for me, just after having this conversation, it's a lot stronger than I thought it was, hearing about the market coming into balance and the deficit going away. But how would you sum it up right now for people who might be looking at the sector?
Look, I think the underlying fundamentals are still really robust. From a structural perspective, we would still be forecasting a deficit for next year, if it weren't for the fact that we're assuming that there's some profit taking from ETFs and some easing of trade tension to allow the exchange stock outflows to come through. If that doesn't happen, like I said, it's still a deep deficit for next year. We've got a pretty robust demand outlook. And frankly, even though we are expecting a bit of a recovery in recycling supply, the overall picture is very constrained.
Well, I think that sums it up very well. So I'll let you go. We've got a lot of points to be looking forward to next year, unless you had any final thoughts that you would leave people with right now.
I think we've covered off most things, Charlotte.
We've done it. Okay. Well, thank you so much. Great to have you. I'm sure we'll be checking back with you early next year. For now, I'm Charlotte McLeod with investingnews.com, and this is Edward Sterck with the World Platinum Investment Council.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.